Hey guys, welcome back. Up until this point, we talked about Fibonacci retracements in practical settings, and then we also talked about a trend following tool that I shared with you guys in the last video. I'm going to use that tool here again because I'm going to build confluence on top of that. So whatever trading system that you're using, I'm continually going to say this. It's all about if you're firing on the right trading mechanics, right? If there's a buy or a sell signal, you deploy capital on that, and then you stick to the decision that you make. And then from there, everything else that happens, it's all discretionary based. Whether you hold on to the position, whether you don't hold on to it, how many contracts you take, whether you're trimming, all of these decisions are up for you to make unless you're doing 100% automation, which most of you are doing discretionary trading, just like myself. So in a second, on the 15-minute time frame, I will introduce the trend magic indicator once again. You'll see how I use it, where I'm taking my entries and then add an additional layer of confluence on top of that. I cannot stress this enough. The indicators and the tools are 5% of the equation. They really are. Everything else is psychologically based. So in subsequent videos that I will make here, I will explain exactly where I take my entries and how I set my stop losses and where I'm looking to take off my trade depending on what my profit target is and if the trend is following or not. Okay, so you're going to get a lot of insight into how exactly it is that I manage the trade once I'm in it. Okay, without further ado, let's continue here onto the 15-minute time frame on QQQ. Okay, here we are on a chart. This is actually a live session. So let's introduce the trend magic indicator, right? I'm going to leave the moving averages out of this example. I want us just to focus on the visual representation of if the trend is there or not. So I explained in the other video that there is a band that is following along with price action. Once that band or that threshold is broken, very similar to how a million other indicators work, once that is broken, then you have the change in color, right? Similarly to what happened right here. You see it all over the place. So how can we use this to our advantage? If you're just using the simple moving averages, it doesn't give you a distinction whether you are in an uptrend or in a downtrend. It obviously does that with slope information. You see that inertia pointing in one direction or the other. But here you have an additional layer, visual layer, that tells you you're in an uptrend or you're not in an uptrend, right? So that already is a huge psychological benefit. So the additional indicator that I'm going to introduce here, there's nothing special, nothing new, nothing proprietary. There's nothing at all. There's nothing at all that's new about what I'm going to show you here. It is literally about following just good guided steps in order for you to make more appropriate decisions as a trader. So the indicator is called the Super Trend Pro. Many of you have heard of the Super Trend. Obviously, it's a very famous indicator made by a wonderful developer here on TradingView. So we're going to add the additional element here. This is actually by a different developer. You can't mess around with the settings. And remember those bands that I was talking about that wrap around price action? You're seeing the bands here. So you can add a secondary trend for sure. You can definitely add that. So you have your shorter time frame trend, or excuse me, you're a tighter band trend, and then you have your larger band trend. So we were discussing this in the other video. And then you can also add an additional MA filter. So this developer included that when they're changing the overall trend. So it looks like one particular color when it's in an uptrend, and then subsequent for if it's in a downtrend. So we're going to remove that here real quick, and we're just going to stick with the primary trend. These are the bands that I was talking about. When that band is broken, when the price action breaks above that particular threshold, that's where you have the change of direction. You might be thinking to yourself, Sage, that doesn't really look like it's pinpoint accurate and it's, catching the perfect bottom and catching the perfect top. If you're looking at this and saying, yeah, no, I don't think that there's anything out there that does so with absolute certainty and accuracy. I think that that's what trading is all about. You can't be absolute, right? If you want to be a little bit more on the noise filtration side, you're going to move out on the time frames. That's why I keep on saying, don't stick to the 5-minute time frame, right? Usually move up. When you move up, then you have a better understanding of what the higher time frames are doing. That is so, so important for you to understand on a psychological standpoint. So when we're looking at charts like this, we already have confluence on what the entry is. And when we're breaking above that band, when you see that, that's what your entry is. That literally is what it is. There's no repainting here whatsoever. Repainting is a concept where you're taking indicators and then you're nudging some of the settings so it can fit your particular narrative when you're talking about situations similarly to what I'm doing, right? There's none of that. You have the one setting and it's set in stone. So when you look back on it, that's what it is. So you can look at the performance, right? You can take something like this and you can see exactly how it performed for XYZ time period for XYZ time frame. Now, how are we going to take this to an additional level and understand this from a psychological standpoint? If we're going to take a trade, whether it's long or short, it's identical to how the VWAP is traded. So the VWAP is going to be something you put on your chart, and when you break above it or break below it, that is your indication for you to take the trade or not take the trade. So the volume weighted price average, this is very similar to that. It's going to be a little bit more of a finer point. So how am I going to take a position and then hold on to, I'm just going to pick an arbitrary level. Let's just use this level right here. We were in a downtrend and then all of a sudden we decided to revert. Are you going to catch this exact candle, that exact candle where you're reverting? Of course not. You don't have enough confirmation, right? If you're trading moving averages or if you're doing price action trading, you're usually looking for continuation. Any number of patterns that are out there, there's a million of them out there. There's ones that are better than others, statistically speaking, but nonetheless, let's get back here to specifically this example. If I'm going to take a trade, I have to consider what my risk reward is. Let's remove this just so we have a clearer visual. My risk reward is more important than whatever indicator I have on the chart, point blank. There is no exception to this rule. If you are not using a risk reward calculator, at least how I like to educate on, if you're not using anywhere between a 1.5 to 2.1 risk reward principle, then we shouldn't even be trading, because that means that you have to be right an astronomical percentage of the time. Most of us are going to be right anywhere between 40 to 50% of the time. And that's not going to cut it. What if your drawdown is significantly more than how much money you're making? Then you don't have a recipe for a successful trading system. Cool? So remember, all of this circles back to your psychology. We talked extensively about technical analysis. I'm not here to discuss 100% technical analysis, even with some of the cool stuff that I'm going to be sharing with you guys. It's all about how you treat the trade after you decide you want to initiate the trade. All of that is psychologically based. So I'm taking this position. Specifically, I'm taking the break above. Let's just say I take this candle right here. How I manage this trade is the difference between me being profitable or not profitable. I'm going to set the stop loss, and what is my risk reward on this particular position? Let's remove the drawings here real quick, and let's set that one more time. Give me 1 second. So what is my risk reward on the trade if I set my profit target at the recent high? Or even if I want to use the band here, I can use the band. That's no problem. Let's use that band. What is the risk reward? It's at least 2 to 1. You see what I'm trying to get at? So how I manage my stop loss, where I take my entry, and if I want to follow along with the trend or not is going to be completely up to me. I picked this spot. This is obviously a very good spot, but let's just say the trend started all the way back here. Why, if I'm using a trend following methodology, if I'm using that particular strategy, why would I take a trade here? Just because I think? Why would I take it there? Why would I take it here? Why would I take it here? Why would I take it here if the trend started all the way back here? This is where the repainting thing is. I mean, if you're repainting the particular strategies or the particular indicators that you're using, then you're gonna be in real big trouble with stuff like this. But this doesn't have that problem. You can look back and see exactly where the start of the run was, or if they're absent of a run. Now, on top of this, you're going to use your supply and demand areas. Supply and demand is not going anywhere. It's literally the founding principle of technical analysis. So wherever you draw your supply and demand areas on those higher time frames, if you're starting to trade in those areas and then you find that you are identifying a particular trend, here you were very late, right? You're extremely, extremely late because those bands are very, very wide. So maybe you want a happy medium, maybe not daily time frame, but 30-minute, 1 hour time frame. I digress. Focus on what your entry is, and as soon as you take your entry, how are you managing that position overall? Cool. I'm going to be talking about this in other videos, but let's tie in just an additional indicator on top of that so you can put a fine-tooth comb on top of where your entries could be. Notice how these line up quite well, right? Because they're based on the same principles. They have multipliers in them, right? I don't need to know how this is built to understand exactly how it works. I know exactly how it works. So when we're looking at just a simple strategy, things don't need to be overly complicated. They really, really don't. Jump into the 30-minute time frame and think about this like an actual trader that thinks in probabilities and statistics would think like, right? Look at your trade, look and see exactly where the trend direction is, and then look to fire the trade on that particular position. What happens if, oh my God, I got stopped out on the position, or I took a 20-point stop out and it just didn't work out? I prefer that rather than you hold on to a position that you are massively blown down on because you didn't follow a specific set of rules, right? That's what we're discussing here. So if you just follow this simple methodology, very, very comparable to how the moving averages work, where you enter on the cross and then you look to take the position off of the cross, or let's say you're starting to move in the opposing direction, you decide to take off the position. it's exactly the same. There's literally, it's an identical setup. The only thing is that we use a different core, a different engine in order to determine what our entry criteria is. This is a little bit different than just regular old moving averages, but it'll also be substantially beneficial if you apply all those good practices on top of whatever trading system that you decide that you want to use for yourself. Hopefully I made that clear in this video. Obviously, I cannot go over every example in a very short video, but this lays down the groundwork and the foundation for you to think about everything from a psychological standpoint, even before you start to blindly be confident in the tools that you're using. I don't care how expensive your tools are. Your tools can cost you $100,000. That will mean nothing if you do not have the conditional practices and discipline for you to apply them correctly in the stock market. I can promise you, if you give a million people, not a million, if you give 100 people $1 million, right, and they don't have good practices, they're going to wipe away that money as quickly as you can give it to them. It's all about discipline. It's all about psychology. Hopefully I was able to convey that in this video. So I appreciate you guys, and I'll see you guys here in the next video.